Give me just 1 second. Okay. Okay. We'll give everybody just a few minutes. I got just a short little slideshow. Um, we'll kind of start with this just for a minute, and then we'll kind of go from there. But it's not long, only 10 slides. Okay. So I'm gonna start with a. Is everybody? Most people. Okay. Um. So risk management. We're gonna start with the risk management side, and just kind of go through this really quick as far as like what is risk management and why it's important. Um, in my opinion, if you don't have a plan, that's actually isn't my opinion. This is a very famous quote. If you have no plan, you are planning to fail. Um, and the big common thing and people say is, all right, are we getting some spitting some bars here, Mike? But trading is 80% mindset, 20% skill. Um, that's a iffy one to me. I don't completely believe on that. Um, so trading is 80% psychological, 20% strategical. So if you're only diving into charts every day, trying to learn how to be a better trader as far as charting goes, and you're just completely forgetting the psychological and mental aspect of trading, it's just never going to work. You can't put all your eggs in one basket as far as that thing goes. Trading goes both ways. And in my opinion, it takes, 100% of both. If your mindset is shit every day and you got a terrible, terrible feeling on the market and you're just in a bad attitude every day, that's going to lead you to more ideas of just whatever, I'll hold it. It's down 60%, whatever, I don't care. What's another loss? Then so there's your terrible mindset, and that's going to cause you to lose. And if you don't know anything about trading and you're just jumping in here with no skills or very little skills, you can have the best mindset in the world. But if you're consistently cutting, if you're not getting and winning trades and cutting losses every time, you're still going to come out in the red. So it takes both. My opinion takes 100% of both. You got to have a good mindset and you got to know what you're doing, or you got to know people who do. You got to, you know, follow those good trades, analyze it yourself, find the good trades yourself, whatever works best for you. So, what is a trade plan and why is a trade plan important? Um, a trade plan gives you written rules to follow. It tells you when to buy something, when to sell something, why, why hold, why sell, why cut my loss, why average down. Whatever the case may be, a trade plan lays that out for you in black and white. Now, trading is not black and white. There's always a gray area. But if you have a plan, it takes away so much of the guesswork. If you have it laid out that I will short when it crosses below, when I get an 8 EMA and 21 EMA cross, when that happens, I will short. Or whatever your plan that works best for you is. And it just lays it out. It makes trading become objective rather than subjective. It's not, oh, I think SPY is going to go down. It's according to my plan, my indicators, my charting, SPY is going to go down. Now, no one's perfect. There's always going to be that crazy thing that happens, that crazy move. It's always going to happen, It's just the market. It's just what it is. But A plan helps lower those chances. And a plan also is going to cover your personal goals, your financial goals, your risk management, your strategy, and develop your trading system. Your personal goals may be to, on the days I trade, I only want to trade for 2 hours. I only want to sit in front of my monitors for 2 hours. Your financial goals, whether it be as far as an income or growing a portfolio, growing a retirement account, whatever the case may be, those goals are laid out to you. And then risk management, that's a big, big part of why people fail, in my opinion. If you're running around full porting everything, it might work for a while. It might work for you for longer than what most people work for, but it won't work forever and it won't work consistently. Um, so just learning that risk management, you will see it might be slower, but it would be much more consistent. And there's a reason everyone says the turtle will always win the race. Yeah, you can grab 1,000% gainers and you can hit those. It's not uncommon in the options world. But if that's what you're going in shooting for every day, you might as well just hop in your car and go to the casino because it's just not going to work. Oh shit. Okay. And then your strategies, developing plans. My opinion, Bueller lays out fantastic strategies for you guys. Um, and then develop a trading system. And trading with a plan is the difference between success and failure. If you are jumping in every day and you take a trade based on this reason today and you don't take it tomorrow, you take it based on this the next day, and you're just flying through all these different things, it's just going to be hard to be consistent and grow like that with that almost all over the place style. I'm in this little picture. I kind of cover that a little bit later. So just to emphasize, trading with a plan is the difference between success and failure because that plan lays out everything for you: when to enter, when to exit, how much to put into this, how much, when should I trim, whatever the case may be. That plan lays it all out and holds you accountable to that situation. So, the benefits of a plan: it makes trading easier and your decision making becomes objective. Like I was telling those guys who hopped in here with me um, early, I was saying we're in a profession, a whatever you want to call it, a game um, of money. With money will always come emotion. You will never fully develop no emotions, but if you have a plan, a strategy, a anything like that to combat the emotions as much as possible, you will be in a much better place. Um, that's why all the algos work so well because an algo is a computer. It's an algorithm. It if you lose money, your algo don't give a shit. Your algo don't fail. Your algo isn't losing his house. So that's why it works because an algo, when that plan hits, it sells or it opens without any emotion attached. Your strategy gives you the what, you know, and then you survey your environment to give you a who, and you identify an opportunity for your where. Your who, what, when, where. Kind of gives you that plan, that objective goal to follow into every single trade. That way you're not developing a habit of I think I think this is going to happen. I want SPY to go down. I want Nvidia to go up. whatever the case may be, it takes some of that away. And when you take that away, like I said, it just becomes easier. So as far as your psychology, like I said earlier, in my opinion, you need a clear mindset, as little emotion as possible, rules that you follow every day. Um, and you hear people talk about discipline. Discipline comes when you follow these rules because I can develop rules and I can have them right here in front of me and they can be great. But if I don't have the discipline to follow that, it's I just wasted my time. So clear mindset, if you got a lot going on, everything like that, is going to put you in a worse headspace. You're going to be more likely to take bigger losses. You're going to be more likely to have that effort attitude, which is not definitely not a good situation to have in trading. And then this is a big one to me, putting the necessary work in. And I also wanted to include not all businesses are profitable month after month. So don't expect that to be in your trading either. You're trading for yourself. You're whether you want to accept the truth the truth of this, you're running a business for yourself. You are taking those gains and whatnot. So if you're not sitting down and putting the work in to make your business be great, it's not going to work. You don't see guys becoming overnight successes overnight. You don't see people becoming the biggest bodybuilder in the world overnight. It takes time and it takes sacrifice and it takes effort to get there. And there's tons of failure between here and there. No one has a straight green portfolio. It's just not how it works. You got to take those losses to learn. You got to get those wins to learn, and you just got to grow day in and day out. Something I like to compare this to is a lawn mowing business. You just because I think that's what it's a weird little um, analogy here. If you are in here every day and or you have your lawn mowing business and your lawnmower messes up, you don't say, or your tire blows, you don't say, forget it, I'm gonna throw the whole lawnmower away. You don't say, whatever, I'm gonna go throw all my equipment off the cliff. No, so why would you say, forget it, I'm gonna throw my whole portfolio in it? You wouldn't do that. So when you compare it in that aspect, you start seeing it as a business a little bit easier. So always keep that in mind. Don't expect to be green day in and day out. Not all businesses are run that way. And overcoming greed. You guys have seen me say it in the chat. No one ever went broke taking profits. And like I spoke on just a few minutes ago, if you're hopping in every day looking for 1,000% gainers and you let greed get the best of you, it's greed's gonna win. And being greedy turns into losses. You can be up 20% and your chart can be telling you to sell. And you're like, no, I want 30. I want 50. And then you're down 50 and then you sell it. You just shot yourself in the foot. So yeah, like Bill just said, that goes back to a mentality standpoint. Overcoming greed, putting the work in, setting your rules, having as little emotion as possible. And then your implementation. This is something that is really big to me. And once again, I kind of spoke on it quickly earlier. You develop your plan, you back test it, you spend time learning what works best for you. That's your plan. So you put in the work here. Okay. You have you wake up every day at 9 o'clock, analyze the market, you spend 30 minutes at night, every night looking at charts, building a plan for the next day. Whatever the case may be, spending some time reviewing or going into replay to see price action, whatever it may be, spend time developing your plan and you develop a working plan. So there's your step one. So then you go into tracking your trades. If you shy away from your losses, you're going to keep making those mistakes. If you, my example earlier was if you lose big on AMD and then your mentality going forward is, I'm just not going to trade AMD, you're just shooting yourself in the foot and you're shying away from a weakness that you don't necessarily need to. You just need to put the work in to overcome. So when you're tracking your trades, don't you shouldn't go the rest of the week and say, "What did I even trade? What did I trade yesterday?" You should know that. Should you know the exact times you got in? I don't think you got to go that far, but you should know what you traded, and then a trading journal. Um, there's a few. I will share a website in the chat a little bit later. It's absolutely fantastic, especially if you've been trading for a little while, just to go back and see what works for you, see what doesn't, especially if you don't do it. Do I think you need to look into a whole big review all the time? No. Once a week, a couple times a month, whatever the case may be. But definitely a trading journal. That way you can go back with an absolute clear mentality of why did this work? Why did this not work? With having absolutely zero emotion attached to it because it's in the past. It doesn't matter. I can't go back and change this trade. It's already happened. It's done. It's over with. Contract is expired. It was a month ago. It's done. It's out of my mind. But that trading journal allows you to go back and say, I took a 85% loss on AMD on May 2nd. Why? So then you go back in your chart and you look and you're like, I completely ignored everything. I ignored support and resistance lines. I ignored my fib levels, whatever the case may be. I got caught up on emotion. And so then when you do that, you just loop back to your trading plan and you add a new pillar and you identify your mistakes. You identify what doesn't work for you or what hasn't worked and you change it. And this is how you grow as a trader. And then your mentality, you got to be motivated to be in here every day. You got to be motivated to put that work in when the market's not open. Because, like I said, this is a business. If you're not investing time into your business, it's not going to work. So keep that in mind. Your commitment, same thing. If you're not putting that time in, you're not going to see the results. You might get lucky. But if you're not, and it doesn't even have to go that far. If you're not in here reading the great stuff that Bueller posts, that JBait posts, and those guys share some very detailed stuff. If you're not looking at that and reading and understanding why are they saying that? Where did he get this from? Whatever the case may be, putting that commitment to learning, to or to even just being here, being in the chat, growing. Bueller says it all the time. If you put that time in, you will see the results. And I wholeheartedly believe that. If you're in here asking questions, you're gonna clear those spaces. You're gonna learn, you're gonna grow. It's just how it works. It's completely facts. And then you're disciplined. Um, and just goes back into letting yourself take big losses and blowing up a port. If you're not disciplined to follow this trade plan that you work out for yourself, you're just shooting yourself in the foot. And then setting goals. I am big as far as goals go, and it doesn't have to be anything huge. It can be something as small as I will take one green trade today. I will grow my account by 20% by the end of the week or 25% by the end of the month. Whatever it may be, those small goals to make yourself feel accomplished. and not putting it so far out where it seems unattainable. Those small wins every day add up huge. Um, if you are saying I want to grow my account by 2% a day, that's a lot more attainable and everything like that than saying I want to grow my account from $500 to 5,000 because that's a monstrous feat. But if you break it down, you set those goals, it just makes it easier, makes discipline become easier because you're not forcing yourself to achieve such a high goal. And this one, I love this picture, man. I share it as much as I can. Percentage needed to recover a loss. You take a 1% loss, it takes 1% gain to make it back. Five, it takes like 5 point, some percent to make it back. But if you're consistently taking, okay, let's just do a scenario. Say you are running around, full porting everything like an absolute madman, and it works, and you see a crazy gain in your account. Well, then all of a sudden you take a 60% loss. In order to get back to where you were before that trade, you would need 150% gains. And that's honestly, that is crazy to think about. And I like sharing this with people because it really puts into perspective of cutting those losses quick. Um, Great traders are not traders who make no mistakes. Everyone takes losses. I don't care how long you've been trading. I don't care if you run a hedge fund. You're gonna take losses. It happens. It's part of trading. But the great traders manage their risks. 80% loss on an account, you need 400% total gains just to get back where you were. So that's why focus on those small steps. Um, we'll get into kind of cover compound interest here in the next slide, I think. So it doesn't take large gains to see big changes in an account. Small gains add up in a big way. 5% per day, not compounded. There's usually 20 trading days in a month. 5% per day is an account doubled in a month. It's so then you think, 1 month, 1,000. I'm at 2 grand. 2 months, you're at four. Three, you're at eight. And then four, you're at 16. 4 months, and you're up, what, 16,000, 1,600%. Once again, those small daily goals add up in a big way. And but looking at this, don't get to, oh, that's easy. Consistency is very hard to achieve, but if you're not limiting yourself to 5% per trade, you might hit a 30% win, and then a 10, and a 15. You might take a 20% loss. It just kind of evens out. And at the end of the day, before you focus on getting gains, your main top priority should be account preservation. And so you shouldn't be in here looking for to grow a $500 account by $1,000 a day. It can be done. It's extremely hard. It's very, very hard, especially with that size I just said. But looking for those type of gains also pushes you to make more higher risk stuff. And it's just not worth it. Those small gains every day. I can't preach that enough to you guys. Small gains add up in a huge way. Yeah, I don't want that. Okay. Perfect. Okay. So, and I like to share this um just to show people it doesn't take absolute perfection to grow an account. So, you start with $1,000 along with a good good risk management idea. Say you're going to take a 10% 10% of your account per trade. So, you're entering every trade with $100. Every day, say you want to have, you think, okay, 10 trades, surely I can make six profitable ones. 60% accuracy, which is it's not unattainable. So, say we're setting a stop loss every day for every trade at 30%, right? 30% stop loss on every trade. Okay. So we have that 60% accuracy, right? So that means for the course of the day, our losses, which saying we cut everyone goes exactly to our stop loss, say at 30%. And we are taking gains at, I don't remember what I said this as, and taking gains every day or every trade at 25%. So not the best um, risk management standpoint, but not a terrible one, especially when it comes to options. So you're taking your gains at 25% and you're saying a 30% stop loss, which in my opinion, if this is your win ratios, this is a little dramatic. Saying I'm gonna take my gains at 25 and my losses at 30, it's a little iffy there long term. So you come out with a $30 gain on the day with a 60% accuracy and 25% gains and 30% stop loss. That's 3% of an account per day. So back to what I said earlier, 2% per day is your account doubled every month. So with this risk management standpoint right here, with 60% accuracy, you're coming out with 3% per day. Kind of crazy in my opinion that you can take four losing trades per day and still double an account every month. So just something to think about that it don't take huge amounts to really show a big difference. Um, and here's something I kind of made as far as compound interest goes. Oh, so you take $1,000 account starting with, and 3, 5, 8, 10, 12, 15%, whatever the case may be that you're looking for either as a weekly goal, a daily goal, you can kind of see where you should be sitting at. And here we are with a 3% gain per day, like I was just talking about. And the course of a month, every day compounded, you're up 570% compounded. So I can't stress this enough to set a attainable goal that you can feel good about, and you will see these gains add up eventually. Okay, so that was kind of my risk management spiel. So now what we'll do, pull over. No. I'll change my screen here. Okay. So now what I want to do with you guys is I want to develop a very basic, not really broad, but just a trading plan that you can use. Now, this is not going to fit everyone. Everyone needs to make their own and tailor it to themselves and what their goals are. But this is could be a good little standpoint for you. So our first thing we'll start with is methodology. All right, and this kind of goes into your strategy. So for your strategy, you will say, I will be trading options and small cap stocks using technical analysis and support and resistance, and other proven indicators. And kind of what I'm doing is I'm going back on that idea from earlier as giving yourself a written set of rules to follow every day. That trade plan to really focus your discipline in a way that will be useful and practical every day. So, time frame. Um, whatever the case may be, for this, I like to say I will be using a 5 minute and 15-minute chart to determine good plays, long or short. Just simple, very broad way just to lay it out for you. And if you are one of those people who don't sit at your computer every day, you could give yourself a time. Um, but just for a simple fact of every day, I will be trading every day from 9:30. Oops, little smiley face there. I don't know how I managed that. 9:30 to 4 every day. And that's Eastern time. You guys who live in crazy areas, it's it. You West Coast and Central guys. Um, so this kind of gives you so you're this kind of the way I like to explain this is so you're not loading into a 5 minute chart today and tomorrow loading into a one. It just really throws yourself off and takes away that consistency and that growth and that experience. Because if I'm focusing on a 1 minute chart today, I'm going to trade differently based on a 1 minute than I would a 5 minute. So if you give yourself a time frame to focus on and really develop good plays, it just makes you that much better and that much more consistent. And then the big one, money management. Ruin. This is a big one. I will have a position size of whoa max of 10% capital per trade with a 5%. I spilled a drink on my keyboard yesterday and it's messed up really, really bad. With a 5%. Honestly, it's not too bad except for the space bar. Space bar's done for. With initial entry of 5%. And what I like this idea much better because if your 5% initial entry runs, it runs. You take your gains and you move on to the next. So therefore you've got, yeah, you're not that 10% into a trade, so you're gonna make less. But at the same time, you know, you still got gains with the smaller part. Now that can be a little hurting your mentality of, oh, I should have went in with more um money, I should have went in with the higher size, whatever the case may be. But also put your own feel on things. If you're highly confident, go ahead and go in with 10. But I don't recommend anything over like 20, 25. And that's only with small accounts because once you start getting into higher amounts like that, it's just so easy to blow a port up. If I'm entering trades with half my account, I can see good gains, but I can also see big losses. Taking a 20% loss on half of your account is a 10% portfolio loss. So definitely your ruin, your risk of ruin, whatever you want to call it, is a big part of a plan. Just being aware of how much you're putting into a trade and how much you're willing to lose per trade. So that'll jump right into our stop losses. I max. So this kind of gives you a stop loss to look at per trade. Um, ST asks, how do I plan a stop loss, mental or option contract stop loss? Um, I prefer a technical standpoint. If I'm entering a play based on these things, once if I have a level at 400 and another level at 394, I may not exit as soon as it breaks 400. But if it breaks my next level of 394, that's go ahead and cut. Go ahead and cut it. Get that stop loss out of the way. It's done. It might come back up, but the chance of it coming back up gets smaller and smaller every level you break. And then plus theta, all that good stuff. It just really gets a little iffy the more you continue to hold. And so speaking on that standpoint, we'll go with this. I can average down. So with this, if averaging down is something you want to do, you can choose not to, whatever the case may be. If you're entering in with a 5% capital per entry, that leaves you with that other 5%, say it's $100, $50 entry and a $50 average down if needed. So it kind of gives you a little bit of wiggle room, kind of can go from there. Um, so definitely something to think about as far as that goes. You're averaging down because averaging down is a good way to blow up an account. You might have entered your first play at 1.2. So you're at 1.2. So you spend $120 on this one contract. You come back, you look, and now it's 40. So you say, okay, I'm gonna go ahead and average down at 40. Well, then now you look and you're like, oh, these contracts are now only $6, 0.06 per contract. Okay, I'm gonna buy 10 of them. Okay, now they're 0.4. Now I'm gonna buy 15. Well, now you have shitloads of money that you didn't plan on putting in, and now you go and look, and theta is just eating away, and there goes your port. So have that max position size to prevent that from happening. To go back on it only takes 4 to 6 good plays per day to be profitable. I honestly have a sticky note in between two of my monitors that says exactly that. I only need 4 good plays per day. Sticky note right here in front of my face. Definitely something that's important to me. I think it's helped me along the way, is having that mental reminder. So then we will take scaling, moving on with our trading plan. Jesus, this is terrible. Okay, so I scale out 50% at the first resistance or sell some based on my chart. slash or yeah, I'll do or. Actually, I'll do slash 20 to 25% gains. And you guys see me follow this myself. Trim half at 20, 30%, stop loss at even. That, if you're doing 10% per trade, a 30% loss, I mean, a 30% gain, and then a stop loss at even, you're still coming out with 15% gains. You can't argue with that day in and day out. So definitely something to get accustomed to, and this will protect you because if you get your gains, set that stop loss at even, that allows the play to run more and not limit yourself. Because if you close the whole trade at 20%, you're just limiting that. It might run another 50, but if you close it, you're not going to witness that. But if you scale out half and then set your stop loss at even, you have nothing to lose. But what 15%, whatever it may be, half of it, whatever. I would take that over limiting my gains. You are limiting your losses and maximizing your gains. That is a big part in growing a small account is limiting those losses and letting your winners run. Because if you're just saying piss on it, I'm gonna take my gains at 20 and then you're taking 20% losses, it gets a little tough to grow that small account. But if you close half at 20 and you close the next half at 50, that's a significant gain that you can take with you into the next trade. Okay. I will throw this in here. Um, I'll pay myself 5 to 10% each week. Um, if I have been profitable. And this is a big if for you and for each person. Um, each person will differ from this. Some people, their account is just there to for growth or whatever the case may be. So this is very this varies for each person. If you ever get to a point where you are trading under an LLC, this is important because if you're not paying yourself through an LLC, they will deem your business not a true business because no one's getting paid. So keep that in mind too. But definitely iffy. Put this in yours. Don't put it in there. Definitely a iffy part of the trade plan. Um, and then psychology, the psychological aspect of trading. A daily record. I will record every trade with entries, exits, time, and ROI to refer back to and learn from. Like I was speaking on earlier, doing this allows you to go back onto your trades with a clear mindset because it's already happened and identify what works, what doesn't, why you will never do this again, why you will do this again. Good and bad, there's something to learn. So always, I think a record is important. Most of your Most platforms will, you know, have that. It's not hard to get to. It's not hard to reach. Um, it just takes a little bit of time, and that kind of goes back to if you're not putting the time in for your business to be profitable, it won't be profitable. So, and then we will go to daily questions. And this is something I do. I will be completely honest with you guys. I spend 30 minutes to an hour. Um, I wouldn't say every day. I've kind of gotten to the point where I don't do it every day. Definitely 3 out of the 5 days a week. I will ask myself these questions. What went well today? What went well this week? This month? And this goes into the fact of the market is forever changing. This market is not the same market that people were trading 10 years ago. Shit, this isn't even the same market that was here 3 years ago. It's different, it's changing, and you have to change with it to see those gains, to be profitable, to be consistent. You have to be adaptive to the environment changes, and you have to be able to recognize that it's different, that it's more volatile, that there's more retail traders, whatever the case may be that you recognize, it's always going to change. This market that we're trading now is not going to be the same market we're trading in 2 years. You know, it's just not. It's forever changing, and you have to change with it. This isn't really a daily question. This is more of a weekly, monthly question. Strengths and weaknesses. For example, today, um, say my strength for this week was I was very disciplined on um trimming. I was very disciplined on once I seen that trade hit 20, 25%, I closed half and put my stop loss at even. That is something I've done very well this week, this month, whenever it is that you're looking at this. And then for my weaknesses, um, I entered the trades too slow. I waited too long, very consistently. I kept entering late. I wasn't focused on tickers that had the volume day in and day out. I was holding too long. I refused to take a loss. Whatever it may be, identify those weaknesses so they don't continue to haunt you. If you shy away from that and refuse to shine light on that weakness, it's always, always going to be there. Sometimes I do that, enter late, and take losses. See? And exactly. But being able to identify that weakness, ST, will allow you to overcome it. Um, and when you're identifying these weaknesses, you can go back with that mindset of, okay, how do I change this weakness into a strength? How do I not let this weakness affect me on the next trade? If I can say, "Oh, I'm waiting for 4 confirmations when I don't need to." When like I knew the play was going down, but I didn't have the confidence to take it. Whatever your case may be, identifying that weakness highly, highly important. So much info and really helpful stream. I can only stay until now. Have a great night, everyone. No problem, man. I think Bueller is recording this. Oh, he's not even here. Okay. Well, oh no, I was talking about Viet. He said he had to go, but like I said, I'm pretty sure that you were going to record it, so it'll be okay. Um, but yeah, so identifying those weaknesses, kind of go from there. Build on them. Build on your strengths, and the last one Where did plays go right? Where did they go wrong? So, looking at this is definitely a daily question, especially if you ended the day red. Go through at market close and just ask yourself what happened. Why was I not profitable today? Why did I consistently lose? Whatever your question is, why did this play not work? Whatever, take that time and identify where it went right, where it went wrong. And once you put that time in consistently, it just becomes a normal to you. If you're consistently staying at your looking at your chart until 4:30 in the afternoon, it just becomes normal. It becomes something you do. If it's something you do before you go to bed, whatever it may be, whatever works best for you, everyone's different. But getting in that habit of putting the work in, developing those good habits, looking into things and not just letting the emotion ride. Something actually, I thought I had it in the PowerPoint, but I guess I didn't. Is getting caught up on what I like to call hopium. Man, I hope this trade goes green. Man, I hope SPY drops. Now that's subjective. It's taken away from your objective trading plan, and you've let emotion take fully control. And that's what happens to people when they hold and just won't accept a loss. So then you start saying, "Oh, yeah, I hope this comes back up. I hope this comes back up because I didn't cut earlier. Now I'm down 500%, or not, or my account is down huge, 50%. I should have cut it at 20." And then you tell yourself, "Oh, what if I can just get back to negative 20? I'll cut it." That is emotions to the max. So try to cut that out as much as you can and identifying all this stuff. I will share this um in the chat. That way you guys can have just a basis to go through. Um this is a pretty broad trading plan. Um so go through and tailor it to your needs, tailor it to your way of trading. And I'll say especially like as far as this goes, um and as far as money management goes, I seen somebody talk about it earlier. Larger accounts have it easier in money management because it's easier to see, decent gains on a smaller entry of an account. But playing that double-edged sword, if you can't grow a small account, you're not going to be able to manage a big one. And I'm not trying to like talk bad to anybody. It's just the simple fact of it. Because this 10% per trade, if you only have 250, $500, finding a good, especially when it comes to options, finding a good options play for that price becomes almost impossible. In that 25 to $50 area, you're forced to play either far out of the money or same day expirations. So there's higher risk there and there. So you just got to be careful. Um, if you have a smaller account, you might have to say, I'm going to change this position size to 25%. But when you do that, also realize you need to change your stop loss. I will use a stop loss of a max of 20% because you're going higher. Um, so definitely tailor this trading plan to yourself. If you have questions, this is a great place. There's plenty of people who would help you answer a question, who will you can always ask me, Bueller. I'm sure he feels the same way. Um, Jay Bake, even people in the chat, man. People is definitely helpful here. It's great. So don't be afraid to ask questions. The only dumb question is the one you don't ask. Um, so I told you guys that I would do some Q&A if you guys have any of those. So if you guys have any questions for me, let me know. I'll probably do this for, I don't know. We'll see how long it goes. If anybody even has any. It can be on anything. It don't have to be necessarily on um, money management. Anything, guys. And if you don't have any right now, you could always ask it in the chat, message me, whatever it is. Oh, here we go. Finally got some takers here. Ooh, it went from one person to one person was typing, and then all of a sudden there's four. Now there's a few. Yeah, it went really, really quick. Walk us through your process to choosing the trades you post. Um, like I was telling some guys earlier, what differs from me is uh so I'll just kind of tell you guys how I have it kind of laid out. I so the beautiful thing that I love about options, because most people do the normal progression. You first invest, you get into penny stocks, and then you move into options, whatever your case may be. Either way, most people here have settled into options. And what I love about options is that you don't necessarily have to have crazy scanners. You don't have to wake up at 8 a.m. to see the the news that these random ass companies dropped. It doesn't matter because you're trading these big name companies like Genus, for example, Genius Brands. Anybody ever watched anything with Genius Brands? No, but this shit jumps 25% because of news. And that's something you don't have to worry about with options per se. Um, I have a group of stocks that I play very frequently, and I have a monitor that I pull majority of them up on with support and resistance lines, and that's all I look at. So I have this big group of stocks pulled up on a monitor, and I look at these stocks. What's at support? What's at resistance? What has volume? And I just kind of narrow it down. And then I have custom built indicators. I use an algo, but I don't use it solely based on entering and exits. I just kind of use it to get an idea. So definitely support and resistance is my biggest reason. Um, and then volume. And then, you know, if semiconductors are running, that's what I'm gonna trade. I alert day trades, so I look for stuff that's very liquid. Um, I don't want to trade anything with an open interest of less than like six, seven, 800, because then you start having to buy at the ask and sell at the bid in order to get out. I wanna I wanna get into a very liquid trade. That's why SPY is great. That's why AMD, Nvidia, all those are really good because they're very liquid. So I look for a liquid play at support or resistance with good volume, following the market, um, or at what could be a potential reversal play. And I only alert to you guys the plays that I have the most confidence in. That's why you don't see me posting 6, 7, 8 trades a day. I just don't believe in that. I don't be a sniper, not a machine gun. Like I showed you earlier, 60% accuracy is all you need. You know, if you're looking for 3% a day, that's one play at 10% that goes for a 30% gain. So I mean that's one play can get you that 3% a day that I showed you earlier. So, just kind of go from there. But, options as far as choosing a play, um, when you're first going about it, um, get five big tickers. SPY, Nvidia, um, QQQ. Try to find five different sectors. That way you can kind of diversify yourself. Costco, Bank of America. You have a few different sectors there. Learn that price action, learn everything like that, and you start with five. Okay, you learn those five, you move to six, you move to seven, you move to eight. Yeah, there you go. Tape exactly right there. What Bueller just posted. Find a stock you like out of those five, learn five. And I like to tell people you should be able to familiarize yourself with just about with relatively close support and resistance lines. You should be able to look at Apple and say, "Oh, I know that there's a support at 138." Once when every day when you start off, you know, wake up at 9 o'clock, 8:30, analyze the market, look at those close support and resistance lines. That way, you don't necessarily have to watch the stock, but you can watch the price. Oh, it's coming close to that. Now let me look at it. Oh, AMD is at resistance. Apple's not yet. Let me watch AMD and monitor Apple's price. So that was a big, long, drawn out process of how I choose the trades and kind of going. But I kind of went on, touched on a little bit more than that. So I love trail stops, but it's always difficult to find and set. I don't use trail stops. Um, so as far as me giving you advice, that sounds really really crazy for me to do. But trail stops are great. I used them when I traded pennies when I first started, but it's hard for me to option contracts move very very fast and move harsh sometimes, harsh than the market does. So following, setting that trail stop at 5% can be a little iffy. Like for I don't know. It's just I don't use them, so I don't want to give you advice. I look only 1 hour before the market opens, and attend my meetings, voice chat with no meetings in the time, and that's great. You take an hour every day to analyze the market before it opens. That goes into that time in part that I was talking about, and that's something I do myself. Let's say you have a small account size, you can only afford to take two contracts with proper risk. You let one run, or take two when you hit your target. Yeah, a small account is all about small account growth is definitely big on you have to really focus on that discipline side um of not of taking good trades because you don't have many opportunities. So and then also not limiting yourself to a gain every day. Take your your two contracts, close one, let your other one run, stop loss at even. You're not losing any money, but you're allowing yourself to see more gains. Yeah, mostly I take trade as support, stop loss 15% instead of taking it at resistance or vice versa for puts. And that's great. That's a great plan to have for sure. I struggle with entering a trade with conviction, even following the levels and indicators. I feel like I'll enter the first couple candles. This has been really frustrating. Honestly, this is gonna sound crazy, but I've said it a couple times in here. I love bowl bands, and I love bowl bands for keeping me keeping that mentality away from me. Because when I see these bowl bands, I see a it can only go to here. It prevents me from thinking this shit's gonna crash as soon as I enter. I see those bowl bands. I'm like, it'll go to here, and this will be about it. It kind of keeps me focused on that, worrying about that. But worrying about conviction and everything like that, that comes with experience. That comes with going back and everything like that. Experience. Um, Market replays are great and that kind of thing too. Leland, can you share this spreadsheet with us? Yeah, I'm gonna send this to either post it myself or send it to Bueller, however it needs to be done. That way you guys can get your hands on this basic trading plan and kind of alter it to best fit your needs. How can I write in the live chat? You just did. This is I love the good old days when we had a live chat. And then there's a video on how to hold stock longer from one of the old videos, but a trail stop is almost what does similar with an app. Yeah, I mean trail stops are good. You can also it's all preference. It's just all preference. A lot of trading is just pure preference. Some people they want to enter a trade, they want to watch it until they exit. Some people want to take it, set it, and move away to take away some of the emotional aspect. So it's all just a preference. That's the beauty of trading. I do it one way, you do it a different way, but we're going to come together with the same result. The best advice you can give to grow a small account. Best advice. Safe and steady. Yeah, for sure. Um, just be disciplined. Um, Not limiting yourself to gains. Just because you see that 20% and you think, oh, I need to secure this. Before you close it, look at your chart. I know this is going to sound it's extremely hard to do, but try to have a very unbiased, non-emotional standpoint and just analyze the chart. You might be up 20% and it's very hard, to do this live and not take 3 minutes to develop a, a conviction on it. So it's tough, especially to do it live with a trade in your hand, with this ticking time bomb that is options. Discipline, having your trade plan, and sticking to it is the best. Like I kind of mentioned to you guys earlier, I have sticky notes in between two of my monitors that lays out very important pieces of my trading to me. And I have this there because there's no way I can look at a chart and not look at it. It keeps me focused. It keeps that discipline right in front of my face. And I would recommend this to literally everyone doing some kind of form in your own way. Because I can sit here and write this trading plan out to you guys, but if you never open this Google Doc again, you'll forget. It'll become a backdoor idea to you. you know. So it's definitely